Hello and welcome to our panel, MoneyDance, the collision course between institutional and decentralized finance. And I think it's a very appropriate day to talk about this because actually we just saw some pretty big news this morning from PayPal. 340 million plus users are now going to have support for buying more than just Bitcoin, ETH, Litecoin, BCH as well, and using it to basically transact. So I think that's one of the highlights of the day so far, and we see Bitcoin finally blowing through that 12,000 level definitively. But in general, let's go back to the purpose of this, which is basically I have some great panelists here today. I am John Wu. I'm president of Ava Labs. Ava Labs is creating Avalanche, which is a next generation blockchain. We think of it as the Internet of Finance, as it is a platform that enables the digitization, issuance, and exchange of assets. Like I said, I'm very excited to have such a great panelist group here today. We have Jamie Finn, president of Securitize, Ben Tsai, founder of Way Financial, Josh Lim, head of derivatives at Genesis Global Trading, Max Boonen, founder of B2C2. I've known most of you for a long time, and you guys know my background. But for the audience and the people who don't know me, I started out in my early career as a technology investor at some funds you guys probably know, Tiger Management, Kingdom Capital, before I launched my own fund, seeded by the Blackstone Group. And back in 2014, when I was looking at the space, mind you, that was basically Bitcoin and very few other things at the time, I was trying to figure out for my fund whether this was a good space to invest or not. And I realized before I can even think about whether this is a good investment or not, I had to figure out whether logistically and mechanically investing in the space was even possible for an actual fund. I mean, the regulation back then was not clear. BTC was still being debated as to whether it was security or currency or commodity. The infrastructure, well, basically just didn't exist. I mean, to be a fund of greater than 150 million in assets, you had to have a qualified custodian, and basically that didn't exist. And as we all know, back then, technology was nascent. No one was sure how secure the blockchain itself was at the time. And if you can get past that hurdle, how do you secure your actual crypto? In other words, do you put it on a ledger? Do you put it on a Trezor? I don't even know if Trezor is around anymore. Do you cold store it at Zapple, let someone else do, or just leave it on the exchange and subjected it to hacks? So, I mean, it was really uncertain for a lot of investors on the institutional side, and the usability of it, if you will, was just terrible. And if we can get past that, you had nothing that you were used to in terms of a professional investor to track these. There was no OMS for this stuff. There was no accounting systems for this. So bottom line, before I could even figure out whether I wanted to invest in space, I realized that if I did invest in the space for my fund, I would not be performing my fiduciary responsibilities for my investors. So ultimately, I decided not to even engage in that asset class for my fund and just do it personally. Well, about 6 years later, we've seen a wealth of innovation and new products, services, and they're offered on a global scale. It's fantastic. We've also seen rapid growth of new users and capital that is validating this interest in, crypto as well as decentralized technologies. And new platforms like ourselves, Avalanche, we offer solutions that we think will get past two of the biggest obstacles that we're seeing right now, which is scalability and speed. And those are areas that's held things back. So I'm looking forward to taking a deep dive with our great panelists here and the opportunities that they see for the convergence of institutional as well and crypto or decentralized finance. But first, hopefully we can go around the table here and have a quick intro. Jamie, you want to start?
Sure. I'm Jamie Finn, president and co-founder of Securitize. We are a technology service provider for issuing digital securities or security tokens. We are working in DeFi with a number of companies already that are leveraging different components of our system, from Securitize ID, which is our identity platform, all the way through to investor kind of onboarding and subscription management. So lots of stuff going on in this space. And happy to be here. Thank you, John, for the invitation.
Awesome. Ben, would you go next, please?
Yeah, sure. My name's Ben. I'm the president and co-founder of Wave Financial. We're an asset management, wealth management business focused on the blockchain and cryptocurrency space. We are a regulated, a registered investment advisor. Most of us in the firm that are front office are actually licensed to be in this space. And, we've rolled out a number of products and services, including the first crypto derivatives fund, and also currently working on a whiskey tokenization fund. So happy to talk about all of that more. So my background is in traditional finance, and I find this space very exciting.
Awesome. Max, would you go next, please?
Yes, thanks. Max from B2C2. We are one of the main market-making firms in crypto, especially on the OTC front, having launched the first electronic single dealer platform in 2016. I've been in the space for 7 years now, feels like a long time. And we are, I would say, DeFi adjacent. We're mostly a regulated institution now, operating in crypto, trying to bridge together institutionals and the market itself. But now, we're paying more attention to DeFi, which I think is much less institutional, but it's interesting in terms of access.
That's great. Josh.
Hey, guys. My name is Joshua Lem. I work as the head of derivatives business here at Genesis Trading. Genesis, some of you might be familiar with the name. We're part of a digital currency group. And we also run one of the largest kind of lending and sort of institutional wholesale funding desks in crypto. We have basically three main business lines. We have the sort of lending business. We have a liquidity business, which is focused on spot trading. And we have a derivatives sort of overlay on top of that spot business, where we help a lot of our counterparties hedge their risk and find ways to sort of express their views in crypto using the tools that they're sort of more familiar with in traditional markets.
Awesome. Well, I'm so glad to have a great group of guys, and we're ready for a fantastic conversation. Jamie, I'll start with you, and Ben, also feel free to chime in. The first subject I want to really discuss is basically tokenization of securities. As you know, you and I worked together. Before I was president of Ava Labs, I was CEO of the digital assets group at Shares Post, and we collaborated trying to digitize private securities, funds, and create a regulatory compliant way of transacting, raising money, as well as transferring from one person to another. We were successful in the sense that we worked with the SEC and FINRA. With your help, you were out there also doing the similar things that we were doing. And I think we all got to the place where, okay, we can actually do this. We can custody these security tokens, all great. But when you open the doors, it was kind of very quiet. We had a few trades here and there. And from a commercial perspective, the world wasn't really ready in 2018. Where are we now, and where's your business at?
Yeah, it's a great question. So, today, and back in 2017, 2018, when we were doing this, a lot of, I would liken it to the early days of kind of MP3. And people were kind of ripping things off of their CDs, and they had them kind of on their computers, and everybody's like, yeah, this is really cool, but I still need the CD because the CD is the real thing. This digital asset's not real. And so we're kind of going through this natural hype cycle, and we started with this really cool new asset. And I think right now where we are is people are becoming much more comfortable with native digital assets, and they're starting to invest in these deals. And thankfully what has happened, which is really wonderful, is it's moved away from the format, and it's more focused on the content, if you will. So the quality of the investment has become central to what people are looking at, as opposed to it's tokenized, so we'll have liquidity. You won't have liquidity if you have a crappy product. Like, the fact that you can trade something doesn't mean people will trade it. So, we're starting to see really high quality issuers get out there. That's really what the space needed. And we've seen some very large institutions get into the space that we're working with that'll be announced shortly. So, from our point of view, our business has been going great. The last announcement of deals, I think we had 125 or so. We're well north of that now. So on the customer base, continues to grow. And like I said, it's really about quality. The stuff we're doing in Japan has gone really, really well, and that's growing nicely. So, I think the US and Japan are really, really well positioned for a strong kind of move into the digital security space in 2021. I think Europe's a little bit more complicated because the regulatory environment's a little bit confusing, and there's a lot of different regulators in different markets behaving in different ways, and they aren't necessarily aligned with the US markets, which is an issue when you're dealing with cross-border transactions. The one that's really surprised me a lot has been Latin America. We've been speaking to like actual stock exchanges and markets in Latin America where they're like, we need to move to this because we have to access cross-border capital because there isn't actually enough liquidity in our market. And so we need a better way to do that. So, I think that's what we've seen over the last few months. And of course, if you're going to be doing anything in DeFi, you have to actually have an asset. So first things first, you got to create the asset. And then from there, you can do all sorts of cool backflips. And that's what we're going to see. That's the kind of ecosystem development that's going on.
That's great. You mentioned the quality of the issuer. And we're seeing at Avalanche a lot of issuers come to us wanting to tokenize their real estate fund. And these are issuers now, because their quality, like you suggested, they're not looking for raising money or incremental distribution, actually. They're looking to make their workflow more efficient by putting it on the blockchain and saving costs from doing that. I think that is the next step. And once we get people with cost savings involved, they will ultimately and hopefully find high quality distribution to come next. But in 2017 and 18, when you and I were trying to proselytize the world, it was adverse selection. Issuers were just looking for incremental distribution or distribution, period. And there's so much venture money out there. Literally, we had adverse selection of people who could not raise money from traditional methods come to us. Ben, you as a VC have invested in a lot of security and tokenization type projects. Maybe from a venture perspective, you can also comment. And I know you've done a lot of work in Asia, and Jamie just mentioned a lot about how Japan is coming along. Maybe you can comment on geographically what you're seeing, the differences in terms of regulation for security tokens, and also what kind of tokenization companies or projects you guys are investing in.
Sure. On the VC side, we've actually been involved very early in the conversation. We're actually an investor in Securitize. We've been very happy with them. I think it's an amazing level of work that they've been doing. I'm actively involved in Japan just because, I've spent actually a lot of time in Japan and I've seen their progress there. It's actually quite impressive. Japan as a market is very interesting. It's very different from most other markets in the sense that the large firms, the firms that are really driving the market, is taking the lead on the blockchain side. What they're doing, some of which I think are kind of boring, some of which I think that are quite interesting, but they're embracing it full force. The first thing they want to tokenize is actually corporate bonds, which from my perspective is actually quite boring for those of you that have worked in fixed income before. Japanese corporate bonds don't have a lot of spreads, and no foreign investors really want to hold very much of that. And the Japanese investors don't trade it. So it's a buy and hold. It just sits there. So, putting it on a blockchain, make it tradable, not very exciting. But, it's their biggest asset class. That's the first thing I want to do. The second one, actually, the one I'm personally very excited about is real estate. Japanese real estate market is very, very traditional, very opaque, very for the lack of a better way of saying it, very backwards. It's not like the US where you can look up how much that price was, that property was sold, titles and so forth are not public information. So by putting things on the blockchain, I'm really hoping that can free the market up. If you look at it from a liquidity perspective, Japan by asset, there's a lot of asset in Japan. It's a relatively rich country, but in terms of liquidity, it's actually not very liquid because everybody's stuck with kind of holding book value of assets that purchased 10, 20, 30 years ago, or market value they can market, but they don't sell it. They don't trade it. They don't, there's not a large habit of that. And because of that, I think there's a lot of value that's locked up, and that securitization process would really help. Japan still needs a few more steps. They've gone through, the laws were passed, I believe, in May for recognition of digital assets. There is the Japan Security Token Association, which we're a member of. There's the Japan Security Token Offering Association, which we were invited to be a member of. I don't think we've joined yet, but so there are a lot of progress, and they're driven by the biggest firms there. I've spoken with most of the major guys, the Mitsubishis, the Sumitomos, and the Nomuras of the world are all driving this forward. A lot of which are involved with Jamie's firm also. So it's all moving forward in a very synchronous, large cap, big company. It's a very Japan way of approaching tech, I guess. Right. So we're seeing that. At the same time, I don't think laws have been passed for secondary trading yet. So currently, private placement, investors are actually not legally allowed to trade with each other. So even in the digital format, that has not come through. That's something that's being worked on. We believe that'll come through by the next round of regulatory, the laws that'll come out next year. So it's not quite there yet, but it is a very concrete foundation. Most major firms are getting involved. It's in the news. It's exciting. Real estate's being tokenized, bonds being tokenized, and so forth. SBI just announced they're doing a private placement STO of their esports business, and so forth. And they're also doing corporate bond. They're doing exactly what they should be doing. So I think that part of it is very interesting.
Awesome. Do you think Japan, in terms of clarity for regulation and laws, is ahead of the U.S.?
Not necessarily. I think in the US, I would say the US is probably 2-3 years ahead. And in blockchain crypto space, 2-3 years is a lot because things move so fast. In the US, I mean, there is a level of regulatory clarity to go through. If you don't mind, I'm going to switch gears and talk about what we're working on. We really saw tokenization as something that is very interesting. So we're now currently offering a whiskey fund. And the fund basically is following US regulations, Reg D, Reg S. After the Reg D 1-year lockup is over, we're going to have it be tokenized. The tokens will be tradable in the US on a security token exchange. All of these things are already very clear and open, and people who are operating in our license are operating in a compliant fashion. So from that perspective, I think there's a lot of progress. I know Jamie's firm has a transfer agent license and so forth. So all of that is already in place. Whereas in Japan, the big firms are moving slowly forward, and they're still trying to feel out where the edges are. I think a few deals are being done as a test, for example, the SBI esports deal that I'm talking about, it's being sold to a partner company. It's a single placement of STO. It's not going to a group of investors, it's not going to a lot of investors. It's not going to get traded afterwards. It's really kind of testing the blockchain, making sure the transfer function works and so forth.
Got it. Excellent. The next question, I'm going to switch gears a little bit to a market-based question. That this is for either Josh or Max. But in the last, call it 4 or 5 months, we've seen Square put 1% of their treasury into Bitcoin, roughly $50 million worth. You've seen a company, MicroStrategy, also do similar things and then top up, do it again. With all of these companies, and then Square's already made it easier for individuals to invest in Bitcoin. But now you're seeing them allocate their treasury into this asset class. I would have expected Bitcoin by now to be 20,000. If this news came out in 2017, this will be at 40,000. Can either one of you explain why we're not getting the similar interest in, again, it's great that PayPal comes out today and we're finally breaking through 12,000, but maybe you guys can give us some color on what's happening in the markets.
I want to make a parallel, if I can, with a similar announcement a couple of years ago. It was, I think, September 2014. PayPal announced that they were going to support Bitcoin. Now, 2014, well, we thought that they just made that announcement, yesterday or today. It's not the first time. In 2014, PayPal had a subsidiary called Braintree, and they started, interfacing with Bitcoin. And the CEO of Braintree said, "This is actually PayPal getting into Bitcoin." Now, I remember very well because I'm not a principal trader. I'm a market maker. I don't take big views. But I remember the market popping something like 20% from around $400. But then it came back down. It leveled off. And I thought, hold on a second. if Bitcoin only rallies 20% and then it just kind of comes down a little bit, retraces on news that PayPal is adding Bitcoin, this is a big short signal. We are super bearish, we have to go short. It's like one of my rare directional positions. I went short Bitcoin, and yet over the past...
Max, there's some technical difficulty coming through your mic. Maybe Gil can help fix that. Maybe Josh can address this question while we wait for that.
Yeah, no, that's, I was looking forward to hearing about Max's anecdote, but yeah, I mean, like from our perspective, I'll take a much shorter term view. Like we, in the last couple of weeks, have seen a massive influx of, I'd call it like corporate treasury type of buying, right? I think that's something that I think still does require the services of like a sort of a sell side firm like us that's like higher touch, right? Like a lot of people who are new entrants in the space are looking for like a helping hand, you know, like the kind of quote unquote white glove service to really like guide them through that process. And I think a lot of it is sort of tying in like a suite of services, much like, you know, Ben and Jamie have kind of described, like you kind of have to provide the entire infrastructure that people are used to in other asset classes. So basically for us, that means, you know, all the way from execution to kind of custody, storage, reporting, all the admin related to sort of that custody. And ultimately, you know, you kind of wrap that all into something called a prime brokerage business, which I understand is a term that's, you know, bandied about pretty casually in crypto these days. But, you know, that's actually a pretty like complex like infrastructure that you need to build for institutional guys. And, you know, it requires you to have the ability to finance like your counterparties, your trading counterparties, help them sort of expand their balance sheet, give them buying power on various exchanges. And it's not a simple matter. And it's not a pure technology issue too, right? It's a lot of it is you are going to take some credit risk to your counterparties. And I think that's one of the things I think us as a firm, as a sort of first mover in the lending space, that I guess the centralized lending space, given that this is a DeFi focused panel, I think that's something that we are, you know, very, very focused on. It's sort of tying together our liquidity offerings and our sort of financing offerings together into that prime brokerage business. So that's, but to answer your question, yeah, I mean, it's definitely much more to buy these days, especially on the spot side. I think you kind of saw that was a lot of this came in, let's say like in the kind of mid tens, $10,000 range. And yeah, it's kind of been a one-way train till today, obviously with the PayPal news. And keep in mind, this is kind of in the face of the BitMEX news and the OKX withdrawal halts in this kind of like 2-week period. So it's obviously when Bitcoin starts rallying without regard to any sort of negative news on the headline, on the tape, that's always a really good sign for continued bullish activity.
I know the title suggests that this is a DeFi panel, but it really is just a convergence of traditional finance and blockchain/crypto. So that's with the expertise of this panel. I definitely want to cover more than just DeFi, as we already have. Max, I think you're back now. Sorry, your technical difficulties cut you off. You were in the middle telling us the parallels between this PayPal announcement today versus that in 2014.
Yes, thank you. In 2014, after the PayPal announcement, the market took a dive. I think that there are stages in the market where the market feels ebullient and wants to believe in positive news. I'm not saying that this is the case today. In fact, the macro environment seems completely poised to support the Bitcoin rally this time around. But I think we should be mindful of drinking the Kool-Aid too much. And in fact, especially in shorter horizons, a lot of the price discovery is done by speculators, and the fact that there's an outside participant now trying, thinking that they should purchase Bitcoin, it doesn't necessarily have a big impact on price. And in fact, I'm thinking of something that Jamie said, which I thought was quite interesting, is that you said that the fact that you can trade something doesn't mean that you will trade something. And I think it's quite interesting because it's been possible, although but what you've had is that it's mostly the speculative institutions that have entered the market. And first and foremost, we're talking about Japan, which is a market that I know quite well, considering Ben mentioned SBI. They just did investment in B2C2 this summer. They went first because they have the most sophisticated retail brokers in Japan, and they saw Bitcoin as a new asset class that people could speculate. And so the institutions that could trade Bitcoin, well, there's many of them, but the institutions that do trade Bitcoin today, they tend to be more focused on speculation. That's why I say that we have to also take heed and respect the fact that in a lot of cases, it's the speculators in crypto that really set the price. So I welcome, obviously, the news that PayPal and others are adopting Bitcoin. But I'm reminded that in 2014, people,
Unfortunately, Max is losing a little bit. I think just to summarize a little bit of what he said, a lot of the price action is driven by speculators, I believe, is what Max, the short of what his point was. And that is actually a great point. And I remember back in the day that people who were trying to use Bitcoin, Ethereum to create applications were worried about the volatility of Bitcoin because it was not going to be a good store of value. It was not going to be a good medium of exchange if it was so volatile. And I think if you fast forward now 3 or 4 years, people really need to be careful what they wish for, because if you look at Bitcoin now until today, I haven't seen it today, but if I look at the 30-day vol, historical vol annual for the last 30 days, I think it's actually under 30%, very similar to the US stock market. Whereas the implied vol for this space for Bitcoin at least is still at 60%. So there's a big disconnect between expectations of volatility from the speculators and the actual volatility. So that does buoy Max's point that the speculators are probably not speculating as much, and that's part of the reason why the price has not moved as much on all of these headlines.
One thing I wanted to bring up that was the most interesting thing about the whole announcement for me was the concept of a wallet going mainstream, which, because for a long time, in the world of crypto, I've always kind of railed against the whole concept of wallets because they're really weird and investors don't understand them. It's a thing. Nobody has a wallet. You don't keep your securities in a wallet. I don't invest from my wallet. That's not what I do. I have accounts. And so that for me has always been something I've struggled with. And I think the most valuable thing that's probably going to come about from this is going to be the education that they're going to have to do in the market to explain what a wallet is and how wallets hold these things, which is something that no one's really understood to date. Even right now, I mean, I'm supposed to be on a product call with our team where I'm going to argue with them about the word wallet in our user experience because people don't get it. And so for me, that's actually the most exciting part. I think the asset class of Bitcoin is fantastic, and it's super interesting. But again, I would love for Max or Joshua to enlighten me as to why it moves the way it moves. But I think it's just kind of a coin flip in many cases.
Well, I don't think it's a coin flip, but your point about wallets is a very good point, because even with DeFi and all these other applications we've seen, it's been products built by crypto people for crypto people. And if we want to get the asset class to invite new participants in, we have to make the experience more like it is a Schwab account experience. And I think what Jamie's referring to is, I think in the headlines today, I was reading on this PayPal, Venmo has effectively become your wallet for PayPal in order to transact in Bitcoin. So that little, very popular mechanism, Venmo, can really teach traditional people the concept of wallet and make the experience more palatable to them. And hopefully that will invite new entrants into this space.
Yeah, if I may just jump in, I completely agree with what Jamie's saying. I mean, for us, when we deal with our high net worth clients and corporate clients, we typically steer away from the whole discussion of wallets and so forth. We use qualified custodians. We have accounts with them, and we deal with our clients in an account format. And we have separately managed accounts, which are actually separate entities that are offshore and so forth. So all of that is much more kind of traditional finance oriented. With that said, we're steering a lot of business to actually Genesis with kind of centralized lending and so forth, and that's an area of great interest. And just to kind of also, comment on Max's, story, I think the environment is probably a little bit different between now and 2004. I think right now, from a more macro perspective, there's so much liquidity or so much fiat, that's being pumped by the global governments into the economy that I think there's a great foundation for that to flow into different things. We're now seeing kind of equity markets being, rallying in the middle of a pandemic. We're seeing SPACs being, fundraising for something that they haven't bought yet. We're seeing, really a lot of liquidity trying to find places to go, and there are no places to go. Gold is going up and so on and so forth. So, I would not be surprised if that, that foundation, on a dollar basis has been built for a rally in something like a Bitcoin with, being, I would call it almost like a hard asset. I know it's not, but, I would call it like a hard asset. And you're seeing similar, rallies in real estate also, and basically all the assets where people park that liquidity.
That's right. With this global money printing, we are definitely seeing asset inflation and fiat deflation. And when you get less than 1% in a US, bank, there's no wonder that DeFi kind of has taken off. One of the number one, applications in DeFi is basically yield farming. And you have also centralized guys like Josh and his firm providing a lot of this yield. So what's interesting about what I see out there and tying that back into the usability that Jamie was talking about in the wallet, we had companies in this space like Cello and BlockFi and Voyager. Their whole business model is to make it easy for investors. And there are other funds that say, okay, give me money, I will give you a better yield. And then they go and do this yield farming and do what they need to do in order to capture almost a spread. So to Josh or to Max, two things, I guess, given that if people get more acclimated to that, does it make the whole BlockFi product less appealing? And are you, as a centralized yield player, are you in direct competition? And how is that competition with a lot of these DeFi products?
I can, I'll start. So I feel like, crypto is still too small and too early stage for us to be kind of at each other's throats as competitors, really. Like, I kind of view everyone as sort of like building out the same ecosystem. Maybe that's just the idealist in me, but we partner with, a couple of the people on this panel. Like we trade with, nearly everyone in the space. I think BlockFi in particular is a great partner for us, and we love the product that they're building, especially for kind of retail, high net worth individuals that they work with. I mean, I think for us, like, it's just a matter of like what you specialize in and what you think your competitive edge is, right? So like for us, I think our competitive edge is like, we can take, hundreds of millions to billions of dollars and deploy it because we have, really good pipes to like institutional kind of sources and sinks of funds. And I think that's, that can only really be enhanced by working with as many sort of, retail facing partners as we can. And also with, firms that are active in DeFi and do have a use for assets and are willing to sort of like take protocol risk and things like that. And potentially regulatory risk as well, right? Related to deploying assets into these protocols. And so, and like, I think all of this stuff, I think it's not necessarily the right view to view this as like a zero sum game. Like, I think the more we all participate in the different aspects of the crypto ecosystem between DeFi and centralized lending desks and centralized liquidity providers, it can only be beneficial for everything. And like, the best sort of example of that is just like the proliferation of like trading volumes with the addition of like all these new sort of like, Delta One derivative venues, right? Like the BitMEXs of the world and the FTXs and Huobi's, Binance, like all these places are only sort of like increasing activity across the board and improving execution and liquidity for most people.
I think one of the themes I just heard from Josh was that there's just not enough liquidity unless you get all these participants helping out. As a market maker, Max, are you hearing or seeing the same lack of liquidity, I guess?
I think Josh is right. First of all, it's not zero sum. First in CeFi, but also in its interaction with DeFi. I borrow from Josh. I lend to Josh's firm. We're trying to build an interest rates market here. and we're going to be better off by just multiplying the volumes rather than trying to be the absolute top dog and running a scorched earth sort of strategy. But also when it comes to DeFi, I think something needs to be remembered, which is that the yield has to come from somewhere, and the real generators of yield are firms like Genesis and B2C2, because, and I think that's a blind spot of DeFi, a lot of the yield farming has really been asset inflation. When you got your 20% or whatever it was on Yearn and things like that, it was really because they inflated the supply of the coin in order to pay the lenders. But on the back of that, if you look at it really on a sort of like hedge basis, taking inflation into account, you were getting like 2-3%, and really 2-3%. I mean, those are the yields that you really ought to get at the moment, because if you can't get more than 1% in term deposits on US dollars, there's really not much of a reason why you should get 10% on DeFi USDC deposits. And so it's important to remember that this entire thing is underpinned by people that actually need to borrow either coins or stable coins or fiat even. And a lot of that is intermediated by more centralized style intermediaries.
So you need to get money into the system in order to do this. Jamie, you want to talk about that a little bit and how you guys are affecting that?
Well, I mean, yeah, it really started with an experience that I had personally, trying to invest in some DeFi deals. I found it very cumbersome in order to be able to get money into the system. And so when you go to push money into the crypto ecosystem, if you don't hold a lot of crypto, which most real investors don't, it's very expensive. So you're going to pay 1.5%, 2%. You can pay less than that, of course, depending on how you figure it out. But, most people aren't going to come in with millions of dollars. They're going to come in with, 50, 100 grand, and you're going to pay that type of fees on that amount of money. And when you do that, you basically destroy all the yield. Getting back to Max's point, 2% is a nice return. And if you're paying that just to get into the market, it doesn't make any sense. I think BlockFi has done a great job of making it very seamless and transparent for a real investor to onboard and be able to send a wire that gets converted into GUSD with no fees, and then you can get your return on that. I think that's a brilliant solution. And that's what we really need to start thinking about, is the whole investor experience from start to finish, and how that wrap works and how the service wrap around it works. Because if you're not worried about the investor, then you're not going to actually get any real money in the door. And so for me, those rails are really fundamental, and making that experience as seamless as possible is crucial. And one of the things that in the traditional space, because around lending you need, is kind of escrow agents, or tri-party custodian agreements. So this is something that I had no idea about, but a few months ago we started working with Coinbase Custody to do these tri-party arrangements where Securitize, as a registered entity with the SEC, we're not licensed, we are registered, just a small clarification, handles this for firms. And we kind of work with like Coinbase Custody on that so that they can do this lending. And there's all these little bits and bobs of regulation and kind of comfort for investors that need to be there. And so that's is not existing necessarily in the DeFi space yet. And hopefully, in the medium term, you won't need that type of stuff. People will become more comfortable with it, but they're just not there yet. And so we just have to be conscious of kind of where the market is. Getting back to my earlier thing around the CD, it's like we're still ripping CDs right now. We're not everybody's like, yeah, MP3s are great. So we just have to be conscious of that.
Not even the iPhone yet, still CDs, MP3s. Who else besides BlockFi is making the user experience really good, either for Ben or for Jim or anyone actually? Any other companies doing a good job?
Yeah, I'll jump in here, not necessarily to answer your question, but to kind of go back on what Jamie and Josh and so forth are speaking to. I'm probably in Max's camp more. I think for those of us from traditional finance are a little more wary of the DeFi side and the way it's currently developed. I think there's a lack of regulatory clarity on it. There's a lack of transparency on the amount of risk that's being taken. There's a simple assumption that there's no credit risk because it's on a blockchain, and the technology risk people don't understand. We've had a few blowups on that direction, and so forth. So our firm's actually published a paper and relatively bearish on the more DeFi market. That's why for our clients, we typically steer them more towards the kind of the centralized financing and so forth, where we're uncomfortable in understanding where that yield is coming from. With that said, I think, kind of a slight difference from Max's perspective. I think that in the centralized platform, there are borrowers that are willing to pay more than 2-3% to access capital. And because of that, the rates in the centralized financing space is actually relatively good. And we have been able to help clients, get loans through Genesis and through other platforms that are, much higher than just, 2% per year. And these are longer dated things too. I think that a lot of kind of misconception in not misconception, I think maybe it's kind of the marketing is a little interesting. A lot of people talking about 50, 100% yield in DeFi, but you can get that for, a day or two. It's great, but if you're not able to repeat that, there's a thing called reinvestment risk, and you're not really making that over a longer period of time. So you're not really generating that yield over, an extended period of time, which kind of is not very meaningful from a dollar perspective, from an investor perspective. So yeah, I mean, we're kind of steering a little bit clear of that right now. I know Robinhood a while back said, hey, they're offering a checking account, and it wasn't a real checking account with a real banking license behind it. And the regulators immediately reacted to that, and they had to withdraw that, I think, in like 3 days, and apologize for not you saying it correctly, blah blah blah. And I think the DeFi is wandering very heavily into banking and lending, and using terms that are very bank oriented. And I don't think any of them are currently being regulated in the U.S., at least with the level of regulations that I would think that they would be. And certainly they don't have any of the bank guarantees like FDIC or SIPC or anything of that sort. So it is they're pushing it, I think, for the lack of a better way of saying it, on the regulatory side.
Ben, that's great. You addressed.
We call it.
Sorry, Jamie.
I was just going to say we look at it, and we kind of, because we wrote an article about this. We've been working with Balancer and trying to figure out how you could do this properly. There's a bunch of articles that we've been publishing about it as well, but we kind of call it hi-fi because it's sort of hybrid finance. DeFi, it's not going to end up being if you're dealing with real assets.
Yeah. Well, that's a catchy hi-fi. Ben brought up two things. The first part of what he said, assessing risk and how hard in the different types of risks that we're assessing here in DeFi versus a centralized world or a traditional world. I mean, if you look at, a lot of these products that we see, and 4 out of the 5 of us have come from traditional finance, we do see a lot of similarities, but the difference is in traditional finance, we are only assessing financial asset risk. Here in DeFi and sometimes crypto, you have to assess technological risk as well as regulatory risk. And in order for this, the whole panel is about converging of traditional finance and crypto. In order for that to happen, we have to be able to give institutions the ability to properly assess risk reward. Otherwise, they won't know their returns properly, and they can't figure out their Sharpe ratio, and they won't come in here. But to that point, for Josh and Max, both of you, one was on the fixed income side, one was in derivatives on the equity side, both worked at the same firm actually way back when. What are some similar products that you see in the DeFi world that you could remind you of the old school traditional finance that you've seen?
Well, if I can start.
Go ahead. Yeah.
I think the basic product of DeFi is the secured lending.
Unfortunately, Max, your line is still choppy. And I'll share one of my own experiences. I mean, if you look at Uniswap right now, it's fascinating because what's happening at Uniswap is very similar to what I saw in the CDO market back in 2007, 2008. I mean, basically you're layering risk upon layer of risk upon layer of risk. Back in the day, people who had mortgages, they would transfer that risk to a bank. The bank would splice it up with different tranches. They would securitize that and they sell it as a CDO. the institution will be able to assess that CDO and the specific risk or the regions of risk, and then hedge that out. So they were assessing the underlying financial product. And then they would take that CDO, they would buy it, they would get a better yield because they figured they can assess the risk better. And then they would take that CDO and then put it into another CDO. So then it became CDO square. And then they would take the CDO square into a CDO cube. That's very similar to getting an LP unit at Uniswap and then taking that LP unit and putting it into another one and then putting it into another one. So that's one example where I've seen where cleverly the DeFi and crypto world have taken similar type of thing we saw back in the traditional finance in the mid 2000s and transformed it into the DeFi world. The only difference, again, going back to Ben's point about risk, is we all thought in traditional finance, we can isolate the risk, which was housing back then, and hedge that out, just financial asset risk. We did not think the whole infrastructure would break down, and almost did. But that's the problem right now with DeFi. Institutions don't know whether Tether will blow up or whether, what's the hidden risk? Is it technology? Is it security, hacking? Or is it just, how do you actually assess, as Ben talked about, the risk reward of each one of these instruments? So unfortunately, Max got cut off. You want to try it again now?
Yes, I wanted to say quickly then that, one product that's to me exactly the same, and that's one of the things I used to trade, really DeFi is secured lending. Basically, you're depositing some dollars and they're collateralized by something else, and it's not exactly always clear why, and you get a yield. But that yield has to be low because it's a secured yield. And one of the things that I think people don't give it enough respect is the importance of credit, in the sense of unsecured credit. And that's something that firms like Genesis have really developed in crypto, is the idea that you need a centralized intermediary. You need.
Unfortunately, Max got cut off again, but he was giving you props, Josh. So maybe you can take his point and run with it.
Yeah, no, I wish I could let Max finish showering praise on Genesis, but I mean, like my thoughts on this whole centralized interaction with DeFi. I think Max is entirely correct. Like there is something that, I mean, people have talked about for years and years and decades, right? Like why do banks need to exist? Like these investment banks that make so much money and kind of extract rent from the system. And I think part of it is like, you need somebody to deploy capital, take risk, and price risk correctly, right? Like despite this whole trend of sort of democratizing investments and Robin Hood for everything, like let the retail trader trade everything. Like we've seen multiple examples of like people just not being able to price risk correctly, right? Like I think a good example of that is like allowing retail to invest in like VIX ETFs, like levered, short VIX futures, all these types of strategies that like even, these are strategies that would sit on like an investment bank's, exotics desk, right? Like it would be very, very complicated, like derivative trading strategy for most people, for most financial services experts, much less for retail. I think, you just need to have someone in a seat that can like manage the risk and monitor it and understand, exactly what you're looking at. And like, I'm not saying that's so complicated that you can't automate it, because I think at some point, all of our jobs are automatable at some point. But I think right now we're still at a point where you do need like some intermediaries to really like fill the gaps in where DeFi is going. And like, we're happy to be that role, right, of like pricing risk and understanding exactly what we're taking in terms of counterparty exposure, and being able to extend to people leverage in a more controlled way.
Great. Excellent. Maybe we can go back to Jamie and talk about some initiatives, because I know you guys have been and on the regulatory side, you guys have recently acquired a broker dealer. You guys were first to get a registered transfer agent. Can you walk us through this blueprint of mad genius that you're creating here?
Sure. And just for clarity, it's pending regulatory approval. We have acquired a broker dealer and ATS that's approved for trading digital securities. The reason that we've gone down that path, because it wasn't something, in the very inception of Securitize, we thought, oh, we'll build everything. We'll do wallets, we'll do the exchange with all this stuff. And then we figured, wait, this regulatory stuff's really complicated and heavy. So we went down the path of figuring out which was the role that we could fill that would really help issuers. And thanks to Juan Hernandez at Open Finance, one day he kind of said to me, you should really look at being a transfer agent, because what you're doing is sort of in that area. And although private securities don't require it, probably a good idea. So we went down, we learned about that. We spent 6 months building software, and then we rolled out the product. Similarly, in this space, we started to see our Securitize ID user base growing. We have over 40,000 investors in there now. We started to see the lack of liquidity in the market, nobody really having the capital to go out and acquire investors, because if you don't have investors, you really aren't going to have any liquidity on the exchange. And the experiences were very clunky, and we kind of hoped and partnered and worked with everyone, and we still continue to work with everyone on it. But unfortunately, we kind of ended up in a place where we thought the best move we could do was to, and a lot of around the regulatory guidance that's kind of come out, was to kind of build this vertical setup where you have the broker dealer, the ATS, so trading system, and the transfer agent all under one roof. I didn't say trust company because we don't have that. So that'll still be a third party the way the SEC in the US is requiring it. But everything else, we'll be able to provide as kind of a full service wrap to issuers. And, we're really excited about that. We're starting to see a lot of folks come to us and just kind of say, either existing product that they already have, because again, digital securities aren't something where you have to go and rewrite your whole offering memorandum. It's just a format issue. And if you have, book entry securities as part of your offering, then this is really the same thing from the SEC's point of view and how you keep track of stuff. So, what we're seeing now is that end-to-end wrap seems to resonate with folks. But we also believe in kind of this multiple ATSs in the US with volume will drive liquidity. So if you have, because you need kind of the price disparity between two places to create liquidity. So if we have an asset that's listed and T0 is also listing it and Open Finance is also listing it, that disparity, or North Capital, whoever else has these licenses, will create liquidity because people will seek to kind of arbitrage between the different marketplaces. So that's the hope, and that's kind of what we've built. So hopefully in the next few months, that will be approved by FINRA, the CMA that we're waiting on, and we'll be able to roll that out. Ideally in Q1, but sooner if we could.
That's awesome.
Tech we have. I mean, tech's not the issue here. It's
Tech's
really
not the issue.
Making everybody understand what you have to do and how it has to work.
So who do you liken yourself to in the traditional finance world? What company would you, after you have all these pieces put together, what's Securitize kind of like? When you walk down the street to the average person, we are like?
I mean, the thing that the average person cares about is, and when I talk about it, it's like we're creating liquidity for private securities. That's what your average person really cares about. Anytime I talk about our company to average folks, I'm like, what do they don't really understand what we do. And I just say, we're creating liquidity for private securities. And then they're like, what's a private security? It's like, oh, the shares in the companies you own that aren't on the stock market. And they're like, oh, okay, I get that. And that at the end of the day is what we're building, is that kind of full experience without having to worry about all the nuance of this license, that approval, this registration. Just everything kind of works for the investor seamlessly. Again, sorry to be a BlockFi fanboy. I think they've done a great job, in terms of creating. I think their withdrawal process needs some work, but the whole onboarding thing is brilliant.
That's great. Going to the VC side, Ben, I read somewhere the other day where about almost, I think $900 billion have been deployed by VCs this year into blockchain or crypto related companies. Now, that doesn't necessarily mean all equity, but not clear. It was very vague, the statement. But from you run a VC firm, where are the interesting areas that VCs are deploying money into this space?
Excuse me. So yeah, we currently run a VC fund. We're about to spin up another one. We're in conjunction with Cardano. really more of an ecosystem fund. So we're actively looking at the different ideas out there from an investment perspective. I personally look after a lot of the security token related issues. That's an area that I'm, highly interested in, similar to what Jamie's been talking about. I think the evolution of this space is very, very exciting for me. So I was licensed in Japan, Hong Kong, Singapore, Taiwan, and also in the US. So I could see how this trend could potentially work out in Asia along with being in the US. So, so that's an area we spend a lot of time on. We've been looking at, some of the DeFi ideas, but we're not 100% convinced that it works, fundamentally from an economic perspective, more of what Max is talking about. We've been looking at payment systems, which fundamentally, I think, for blockchain, systems and cryptocurrencies, it's a great system for cross-border remittance payments and so forth. And I think there's a lot of inefficiency there that this system can take out. Those are kind of some of the top topics. We do get approached with a lot. We're inundated with ideas, people wanting us to invest in them all the time, and we go through and we look at that. And I think the other area I think Jamie mentioned is on the trust side. I think, the banking side of crypto is still very nascent. We have a number of players who have gone down that path, but I think it's still early days. There's not really quite the online banking thing isn't really quite catching on in the US as it has kind of overseas, like the Revoluts and so forth. So I think that area also is potentially right for, disruption, although the disruption may not come from that format. We're looking at a number of kind of trust company, bank, custodian. I don't know what you want to call it. It's kind of a hybrid model. And, people are picking newer jurisdictions like Wyoming or Puerto Rico or other places that, they're trying to just really come up with a new version of what banking looks like, which is a little different from like an investment bank or an asset manager, which is probably more of where Jamie's in and where I'm in, So, from that perspective, I think it's very exciting. Those are areas that we are looking at right now.
Awesome. I'm being told we only have 5 minutes left. I want to give Max some time, unfortunately, because he got cut off so many times. So Max, take a few minutes to discuss anything you want, because I know you had a lot of great things that you want to talk about, but unfortunately you kept getting cut off.
Oh, thank you. I won't take all of it, and I'd be interested in what you guys also think of this. So going back to DeFi itself, I think we talked about some of the drawbacks. But one good thing, I think, is access. And Jamie said, I thought it was a little bit funny, people are going to play with DeFi with 50,000, 100 grand. That's nice. What about, $1,000 maybe? But anyway, it's supposed to be, you have $1,000 and you can start, getting some yield on it without having to trust a bank. I think that's quite interesting. And if anything, that should be the killer app there, because if you're an institution and you want to make an investment and get some yield, yeah, there are 50 ways to do that, right? But if you're the man on the street and you don't trust the banks, then it's a bit more difficult. So I think that question of access is really core to DeFi, and there's a problem there, because I tried today to play around with DeFi. I looked up the fees in order just to make like a tether deposit or something like that. I was looking at $15, and the thing is, on a deposit of $1,000, if you're getting a couple % a year, $15 it doesn't cut it. I mean, it doesn't work. And that's one reason I am personally quite interested in Avalanche and newcomers, because the promise of lower fees, I think, is key. We're not gonna succeed if we have to go through another round of, I remember during the bubble, Bitcoin fees went to like $50. It was really nuts. And with the composability, they can be even higher in DeFi. So I think that's a really big problem, and I'd like to know what you guys think of this.
Well, I'll start, and that's one of our value propositions. Avalanche has Avalanche, and hopefully Avalanche is the place that people will want to go, because it can cut those fees down and have very little decongestion. So I think I'm going to quickly go around the table and allow everyone to answer Max's question, and then everyone can just give one prediction. And that prediction should be where they think Bitcoin and Ethereum will be at the end of 2021, and also the one product or company that will become like the next Uniswap, if you will, in 2021. So Jamie, I'll start with you. Put you on the spot first.
All right, sure. I would just, the reason that I mentioned the 50 or 100,000 is because if you invest with 1,000, you're going to lose it all real quick. You know, my own experience in DeFi, I put 13 ETH in. I now have 7 ETH. So I totally blew it. Do not rely on me for trading stuff, especially when it's imaginary money. Okay, so let's see. Bitcoin 2021, I'm going to go with 37,500 for no apparent reason. I'm going to go with ETH at about 450. I don't think it really goes above that. I think it starts to move off of their network. I'm not sure about the 2.0 migration. And then, I mean, I think, sorry to be the fanboy here, I think BlockFi goes public and Fidelity makes a boatload of money on their investment. And then I'll just be like pinging Zach for a job or something. I don't know. Like they're crushing it.
Jamie, are you invested in BlockFi?
I put a lot of money into BlockFi.
Okay.
I have no position in the company, unfortunately.
Ben, your turn.
Sure. We're actually an investor in Securitize, and I really think Securitize can do well. I think let me put that down as my prediction of what's going to go big. I love Jamie, what you guys are doing in Japan. I'm hoping for kind of similar actions in Asia. I like the fact that you guys were willing to get into the exchange space. I know it's pending regulatory approval, but I thought that's a bold move. It wasn't something that I was expecting, but I think it's something that really will help you guys. So, you know, best of luck with that. And, you know, I would pick you guys as the next big thing. You know, some investment bank may just overpay and buy you guys out, and which is, you know, what I'm hoping for at least. In terms of Bitcoin and ETH, I would say 30,000, 500 for ETH. I think these are nice round numbers. The part that I'm excited about, which we didn't really get to talk about very much, is actually staking. ETH 2.0 coming out with staking is kind of an elephant in the room in the staking space. That's something I'm certainly, you know, keeping an eye out for. We're developing staking technologies in-house for our clients, and, you know, we're actively involved in that. So staking is going to be something new. Once again, some of the staking is just, you know, inflation and then paying back people their own money. It's like tax them and then pay them back for people that stake. So that doesn't excite me very much. The part that excites me is actually, you know, when tokens are used, there are gas charges, and some of that gas charge gets paid back. So the more use there is, the more money everybody makes, that kind of thing. And that's something that's interesting to me. That's almost like an operating company making operating income and paying their equity investors, which I know once again will get us into securities problems. But anyway, I think that's exciting to me. I think structurally that makes sense. I think those are the main things, and I think that covers most of what we're talking about. The last thing is kind of commenting on what Max says. I completely agree with regards to fees and so forth, and I think the smaller investors get the short end of the stick. I'm a big investor in, I shouldn't say big, I'm a small investor in real estate here in Southern California. I know I get decent terms, I get great returns. But I know, you know, a lot of the retail crowdfunded platforms for real estate, I've taken a look at their term sheets. I've taken a look at their fees. It's very hard for them to make any money. And they're providing very small tickets, and everything's automated online and so forth. But yet, you know, the fees that are built in are very, very expensive to support that. So, you know, I'm looking forward to kind of DeFi and the blockchain and systems to democratize that a bit more, so smaller investors don't have to get the short end of the stick all the time.
Awesome. Thanks, Ben. Josh, I'm waiting with bated breath. Your turn. Your predictions.
I don't generally like to give price predictions. I mean, I think there's a decent chance that, you know, there isn't a significant amount of like momentum into Bitcoin. I think Bitcoin is still the first entryway for institutions into the space. So I think there's a decent, you know, not high probability, but I'd say like, you know, there's a chance that we take out all-time highs like, you know, next year. It's a dangerous prediction, I guess. But I'd say in terms of, you know, what I'm most excited about, I think, you know, like everyone was really excited about Yearn and sort of this idea of like building these sort of more, you know, algorithmic or systematic like strategies on top of DeFi. I still think there's like a lot behind the scenes going on there. I think that's a promising area where a lot of people will, you know, spend a lot of resources, and a lot of smart guys are obviously building things there. So that's probably the sector of the market I'm most excited about.
Cool. Max?
I say Bitcoin 17,000. Yes, that's my take. Not too high, not too low.
Very conservative. Everyone else here was like 3x on the Bitcoin, but that's great. I mean, it's only fair if I give my predictions as well. I do think Bitcoin has a little more potential than ETH. I do think Jamie is right that other first layers will start taking a little bit share here and there, but I do think both will go up higher. Bitcoin, I'm predicting a breakout of previous highs of roughly 20,000. I'm not sure we're going to get to 37,000 like Jamie said, or 30,000 like Ben said, but I predict at least a breakout next year. On ETH, I do agree, 450, 500. I think it goes higher, maybe 30% higher in the next year, but it will slowly start losing some share to other first layer protocols, hopefully like ours. And I think, Ava Labs next year as a product and helping solve some of these scalability as well as speed issues will be, I think it's already a breakout company, but we'll continue that breakout next year. So with that, I want to thank everyone on this panel. This has been a lot of fun. You guys are a great group. And hopefully we can do this again in a year and we'll see who was right and who was wrong. Everyone's very bullish on Bitcoin, that's for sure. Thank you all.